The Fed's raised the rate 0.25, 0.25% today. What does that mean to me?
Well, it depends. From a mortgage perspective, it's probably going to have a short-term increase to mortgage rates, which over time, like if we look back at December of 2015, which was the last time that the Fed raised rates, we initially saw mortgage rates take a step higher, and then over the course of the next several weeks, we saw mortgage rates settle back down.
Oh, really?
Yeah. So now, if history repeats itself this time, it's hard to say. I think it's going to take a bit of time, maybe a week, if not more, to see how this really shakes out.
So the rates actually went up today?
They did go up. Mortgage rates shot up by somewhere between 1/8 to 1/4% today alone.
You're thinking if history repeats itself, it may stabilize?
Yeah, mortgage rates generally like the Fed to push rates higher because that is combating inflation, which is the archenemy of mortgage rates.
Okay.
So if the Fed is doing what they can to fight inflation, mortgage rates will like that.
Now what about my credit card? What do I do about
Credit card rates will go up, right? Home equity loans, consumer borrowing costs will likely go up. Things that are tied directly to the Fed funds rate will increase. If you have a home equity line, you may want to look at locking in the rate of your home equity line because over the next year, now the Fed is projected to raise rates another 3 times, which is up from their original projection of 2. So 3 increases in 2017 is now expected. That means that your rate on a home equity loan will go up 3 times if that in fact happens.
Feds have raised the interest rate 0.25, 1/4%. What does that mean to me?
What it means to you is if you're a younger borrower, they're going to keep raising rates, so you better go refinance your mortgage and get a fixed rate now. If you're older and you've got money in a savings account, then what you need to do is you need to know that you're going to get a higher interest rate paid on your savings account. Remember when you got 3, 4, and 5%? Don't rush in to get a 3-year CD. What I'd like you to do is maybe consider that if they raised it 0.25%, they're going to raise it another 2, 3.
So wait a minute before I get my CD. Wait till they raise it a couple of more 0.25%.
Right.
Okay.
Because I don't want you to be locked in for 3 years or 5 years at 1/2 or 3/4. I'd rather you lock in when they get to 1.5 or 2.
All right, what about my credit card?
Now, credit card rates are going to go up as if they're not high enough as it is. And all it really boils down to is that banks, because they've been getting money at 0, and now they raise the rates. So this 0.25% rate increase is already baked in. For Bank of America alone, 1/4% is $1 billion per quarter profit.